Hello everyone, welcome to another episode of Sam's Corner, and today I'm going to do a little something different. I'm going to give a product review, and it's something I've never done before, so bear with me, but I'm excited, and forgive the hair because at a certain point it just does its own thing. So see how I just created this and then it just does that, and I tried to, and it does whatever. And you know what, at a certain point I don't care. It would be kind of nice though if my locks did the Superman. It kind of has that be kind of cool for all you old school who remember that. But anyway, let's get started. So, like I said, today I want to do a product review. I want to review the product, the Self app. And Self app is designed to help you build credit. And so I want to just kind of go into what it is, the pros and cons, and then just to kind of give my final opinion. So like I said, the Self app is designed to help you build credit. So how the process works is you get a loan. The loan, then that amount is held in a CD for you in your name. You make the monthly payments on the loan. Those timely payments are then reported to the 3 credit bureaus. At the end of it, you get your money minus any fees or interest. And so overall, here's, I guess, how I want to explain, because I know that was really short. But so the rationale or the mentality behind the Self app is we're here to help you establish or create better credit for yourself. And so here's what we do. I'm going to say it again, but explain it a little bit better because that was kind of quick. So you're given a loan. The loan can be between 1 year to 4 years. The interest rates vary, but they're kind of in between what I would say the average rate for like maybe a personal loan. They're in between like the average rate of personal loan and like that of a credit card, but they normally can range between about 12 to 15%, give or take. So they give you the loan, you make payments on it. The loan can normally be a term between 1 to 4 years, but at the same time, money is set aside for you in a CD. So as you're making payments on the loan, it's enabling you and helping you to build good credit. And then at the end of the loan, you get your money back in essence, in the form of that those principal payments are in the CD. So here's my thoughts. The pros of it is it helps you to build better credit. It also helps you if you have zero credit. The CD is also a great thing, especially if you have problems saving or you haven't really been saving. It's kind of cool to get a loan, pay it off, and then at least the principal payments are yours. Also with this, there's no upfront deposit. So that's a good thing. A lot of you may have thought about it like as a secured credit card, and it's not. A secured credit card, just for those who don't know, is normally a credit card that is backed by some sort of saving instrument. Can be a CD or a savings account. And the credit limit on a secured card is not greater than whatever the amount is. So for example, if I wanted to get a secured credit card, I would have to put down, like let's say they wanted me to start off, or I was to do it for $300, then I would have to give them the $300, and then I could never spend any more, or my credit limit, the maximum would be $300, and that's basically, it's considered more like a secured loan. And I know I never talked about it in my videos, but secured versus unsecured. But a secured loan, that is a great example. Unsecured loans are credit card, any other loan that isn't backed by something. Some of the cons could be, well, I'll say it this way. It's still a loan. So you're still paying interest. The cons can be if you don't make timely payment, there are fees associated with it, and that fee is 5% of whatever your monthly payment is. And of course, it's a loan, so if you don't pay it back, you default. Some people have asked what happens if you pay it early. You can do that, but the whole point of this exercise is to show you making monthly payments. The reason they really focus on this is because if you know or don't already know, for your credit history, payment history makes up 35% of your credit score. So you always want to make sure you're making timely payments. So again, this program is designed to help you build credit. And if you're not making timely payments, that works against you, and there are also fees associated with it. Another thing you have to ask yourself is it worth it? And the reason I say that is because it's great that you get a loan. It's great that you're going to pay interest, and it's great that you get the principal plus whatever interest, I believe, in the CD at the end of it. But you're still paying interest on the loan side, and the amount of interest that we pay is always greater than the amount that we earn. The average interest rate based on bankrate.com for a CD is like 0.41%. Of course, the interest rate is higher the longer you have it, but if you think about it, like let's say the interest rate on your money CD is like, let's say 0.4, or let's just make it 0.5, not even 1%, and the loan is 12%. The amount of money you earn from the CD, the money being in the CD, will always be less than the amount of money you paid on the interest of the loan. So those are all factors you have to consider. Another thing you have to ask yourself is, do I need this app? And the quick answer is, you might not. It depends. It's a product. And products are not for everyone, but they work for some people. Excuse me. Sorry, it's allergy season. So I'll say this, and I'll kind of wrap this up. So I've given you pros, I've given you cons, and here's my final review. I think this product is great for college students, and I'll tell you why. Because I remember being in college, being on the college campuses. I'm telling you, credit card companies set up tables everywhere. They're like hawks. They descend on you quickly. They want you to get that credit card. They want you to become that stream of income to them for life. And that's not a good thing, because unfortunately, a lot of us weren't taught about credit cards, weren't taught how to manage them properly. We're not taught how to utilize them in a way that benefits us. So I think with the point of it, or I think with it being the fact that there is money put in a CD for you, and then at the end you can have it, I think for some people it may be a way to subconsciously save. And I think especially for college students and for younger people, or people who have problems saving money, or people who need a little help, I think it's great. But for many of us, the problem is of course rebuilding our credit, but I also feel that we all normally have so many lines of credit already out there. And if you're struggling to maintain those lines of credit, then adding another one just doesn't make sense. But overall, I think it's a decent product. Overall, I think that it has some value, and the CD component really helps. But again, it's one of those things. Do your research, read for yourself, and think about and be honest about your situation. Like I just said, if you're having problems paying your bills, then the product isn't going to be right for you. Because at the end of the day, you never want to add on another obligation financially if you're having a problem maintaining the ones you already have. So again, thank you all for watching. I think I'll leave a link to the website in the description so you all can find it. Thank you all for watching. Please like, comment, and subscribe, and I'll see you all next time. Thank you for watching. Bye.